Some central banks have tightened policy, others remain vigilant. Crude oil prices, currencies, and financial markets remain volatile, fluctuating in line with the changing intensity and the uncertainties of the West Asia conflict. In this backdrop, the Monetary Policy Committee met for its third bi-monthly meeting of this financial year on 3rd, 4th, and 5th, that is today, to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments, as well as the outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the SDF rate shall remain unchanged at 5%, and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with a neutral stance. I shall now briefly set out the rationale for these decisions. The MPC noted that headline inflation has edged up above target as expected. The realized inflation for Q1, however, remained marginally lower than projections, reflecting limited pass-through of cost pressures. The higher inflation is mostly on account of fuel and food, with little signs of generalization of price pressures so far. Core inflation, excluding precious metals, continues to be benign. As projected earlier, headline inflation is expected to rise further in the near term. It is expected to peak in Q3 of this year, primarily again due to food and fuel, and thereafter moderate. The underlying inflation reflected by core inflation excluding precious metals, which has been benign for some time, is set to align with core inflation towards the end of the financial year.